Hey, good morning, everybody. Today is Tuesday, May 5th, 2015, Cinco de Mayo. My name is Cliff Backus. I am the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Stocks started strong but weakened as the session went on Monday. Volume continued to be weak. Advancers bettered decliners by about a 4-3 margin. Large caps continue to outperform small caps on a 10-day moving average basis. This is a good sign for the longer-term health of the bull market. Typically at bull market tops, small caps outperform by a wide margin. The market has been signaling the need for a short-term correction while the longer-term health of the bull market remains intact. The market on Monday seemed to be correcting an oversold condition. We'll have to see if today brings any follow-through or if we continue to sell off. It's been quite a while since we've had more than a mild correction in the stock market. Aggressive traders may want to begin nibbling back on the long side. For more conservative traders, cash probably remains king until we see whether this is a case of sell in May and go away, or like the past 2 years, we get a nice summer rally. We'll continue to watch for industry group rotation if the market does resume the uptrend here. So let's see where the strength in the market is rotating to. What we're looking at on your screen is the HGSI, High Growth Stock Investors, warehouse of 7,000 stocks filtered by the top 101 stocks in groups moving to the upside. We then take that group and import them into our Spectrum Analyzer. What the Spectrum Analyzer does is it gives us a snapshot of where the strength in the market was yesterday. By following the daily industry strength, we're able to pick out industry group rotation. So let's see where the strength was yesterday. Yesterday we can see that the top performing group was semiconductor devices, followed by IT services, healthcare supply chain, infrastructure software, and consumer finance. Let's drill down into these a little bit further. Semiconductor devices. There were 6 stocks that made the list: Altria Corp, Ambrella, Broadcom, Intel, NXP Semi, and Skyworks Solutions. 3 of these make our checklist: Ambrella, NXP, and Skyworks Solutions. Our next group is IT services. We have Accenture, CDW, Cognizant Technologies, EPM Systems, which is also in our checklist, and Metadata. Health Chain Supply, AmerisourceBergen Brunswick, in our checklist. Catamaran, Express Scripts, Henry Schein, and Omnicare. Infrastructure Software, Freestyle. LogMeIn, Oracle, Qualysys, which came out with earnings yesterday. They were somewhat disastrous. And Vasco Data. And finally, Consumer Finance. In Consumer Finance, we have MasterCard, Total System Services, Vantiv, and WEX Inc. Let's take a look at our NASDAQ Composite. NASDAQ Composite yesterday was up 11.54 points, or 0.23%. NASDAQ closed at 5016, but closed at the very bottom of its daily trading range. The NASDAQ gapped higher yesterday, ran into resistance right here in the 5042 area. We can see right here that we bounced off of that resistance area and closed at the very low of the day. That's not very bullish activity. Right now the NASDAQ is bracketed by support down here in the 4811 area and resistance up here in the 5042 range. Our 1 to 6 month timing model on the NASDAQ right now is on a don't buy rating. Trading volume yesterday was lower than the prior day. For you followers of William O'Neill, the NASDAQ is currently in a confirmed uptrend. But because of this cluster of distribution over the past month, that uptrend is under pressure. Let's take a look at the S&P 500. The S&P yesterday advanced 6.19 points, or 0.29%. It closed at 2014.48. Like the NASDAQ, the S&P ran into resistance at its prior high in the 2120 range yesterday. Closed right about the middle of its daily trading range. Bulls would like to see the market close toward the top of its daily range. Right now our S&P 500 is indicating a market in transition. It's bracketed by support down here in the 2040 range and resistance up here in the 2120 area. Trading volume yesterday was below the prior day, and the S&P 500 is currently on a confirmed uptrend, has been since January 8th, but due to this cluster of distribution that we've seen over the past month, the S&P 500 is currently in an uptrend under pressure. Let's take a look at the MACD histogram. Our MACD histogram yesterday poked back above the zero line at 0.05. It also is in a mini uptrend. Because the MACD histogram is on a mini uptrend and is also above the zero line, our immediate bias on the S&P 500 is bullish. We didn't cover it, but the NASDAQ histogram is the exact opposite. It's trading below the zero line and is in a little mini downtrend. And so we're getting conflicting signals on our immediate bias. The immediate bias on the S&P 500 is bullish. The immediate bias on the NASDAQ is bearish, reflecting kind of the schizophrenic nature of this market. Right now, we are really struggling with resistance in the S&P. We're also struggling with resistance in the NASDAQ. Until we break through these areas of resistance, I would err on the side of caution in this market. That said, I want to take a look at Paycom software. Paycom provides cloud-based human capital management software that manages employment life cycle for employers and employees. But before we do that, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list, which you can view in our daily spreadsheet. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and currently satisfy at least 62%. Out of a trading universe of about 7,000 stocks, there are currently only about 70 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in the daily video market review, and for the most part, these are the only stocks that we use in our trading strategies. That noted, Paycom is currently in a third stage base with a pivot point of 35.86. Paycom gets a 72% checklist rating, and as you can see, Paycom has set up this very nice little trend line that we're looking for it to break. On Monday, we got a nice pocket pivot in Paycom. As you can see, the stock bounced off of its 50-day moving average, which we show in red. Bounced through its 21-day exponential moving average and its 10-day simple moving average. Trading volume was higher than any down day in the past 10 trading sessions. That's the definition of a pocket pivot. Paycom can be bought by very aggressive traders at this point. That's about all I have for today. If you want to talk about Paycom, any of our trading or market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. A reminder, if you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stand by for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.